Morning, dear members, for joining in today. Good morning, respected Chairperson CA Preeti Savla ma'am. Good morning, CA Bhavesh Thakkar sir, for joining in today and accepting our invitation. Today being the very important topic and a very different one for all our members. So, I would request Preeti ma'am to say a few words for today's topic. Preeti ma'am. Good morning, everyone. Shikha ma'am, are you there?
Yeah, Pankaj.
Thank you for joining in, Shikha ma'am. Shikha ma'am is a co-convener of Chamber Study Circle.
Hello, good morning, everyone.
Good morning, Preeti ma'am.
Good morning.
Ma'am, before starting with the introduction and the VCM, I would request you to please share a few words for today's VCM. I'm very thankful to you for arranging today's VCM. It's because of your help.
Thank you, Pankaj, for giving me 2 minutes. So, friends, very good morning to all of you. And I hope everyone is safe and healthy in this pandemic. And I wish this pandemic should get over as early as possible. And everyone is safe. And welcome to Bhavesh Bhai, to our study circle. So, these various notifications have come recently by government, and there are various schemes available for subsidies as well as startups. Various state schemes as well as central schemes of government are available. However, we are not aware about those schemes. So we were discussing, Pankaj and we were discussing about what all these schemes and packages available. So I feel that sometimes our clients are deprived of such things because of not being aware. So we thought of such programs so that members are aware and can support the clients to get such schemes. And we find Bhavesh Thakkar CA, who is mainly dealing into this area and has published, has supported in publications of WRC also as regards to these schemes, government package schemes. So his knowledge is in depth into these schemes and all. So we thought, let our Chamber Study Circle members are also benefited with his guidance. So and we have done this program. So again, I really appreciate the efforts of Pankaj and Shikha, and I see a lot of senior members also over here. So really on Sunday morning, everyone is sparing their time to understand various programs and upgrade their knowledge. So grateful, Pankaj and Shikha, great going, keep it up. Thank you very much for providing
Thanks,
me
Preeti.
the opportunity.
It is all because of your support.
Yeah, thank you very much. Over to you. Thank you.
Thank you for your kind words, ma'am. Thank you for joining me. I would like to introduce CA Bhavesh Thakkar. CA Bhavesh Thakkar is an partner with EN in tax and regulatory services with special focus on incentives and subsidies. CA Bhavesh sir is a graduate in commerce from Pune University and also a member of ICAI. He is a regular speaker in various industry forums, incentives, and subsidies in India. CA Bhavesh Thakkar has been extensively involved in advising multinational and domestic companies across a range of sectors such as manufacturing and automobile. Sir is a visiting faculty of ICAI and a key speaker at various international forums. As far as professional experience is concerned, he has 21 years of professional experiences offshoring enablement engagements for MNCs. He specializes in providing end-to-end services in relation to the fiscal incentives by state and central government and setting up or expansion of new units. He has presented a paper on state subsidies in India in 2014 and on Make in India in 2015 at MSMES he has made a presentation on Make in India at the Robot World 2015 in Korea, elaborating the initiatives under the Make in India campaign and their impact. He is instrumental in authoring a publication, Captivating Maharashtra, a new guide on new industrial policy 2030. With such a great, massive achievements and experience, I would request CA Bhavesh Thakkar to enlighten us today for today's visit. Thank you for joining.
Thank you, Pankaj, and thanks for the generous introduction out here. And please let me know once you are able to see my screen out here. So I'll probably. Yeah, is my screen visible?
Yes, sir.
Yeah. Thank
Yes,
you.
sir.
Yeah. So can we start now?
Yes, sir.
Yeah, thank you. Thank you. So yes, good morning to all, and keeping in mind that it's a Sunday morning, so the topic what is there is less technical, so you don't have to deal with sections and stuff. What you need to be aware is what's going around. It's not super technical as we see the case laws and all that stuff, but what we need to also see is how can your client benefit? How do we move somewhere out of the compliance regime and try to look more at what can be a value add, what you give to your clients? And obviously, as we see practicing in this, that this is a great value add which your clients get, and there's always a red carpet welcome to this. So the intention for today is obviously not that you will get a mastery on this, or you will be able to probably start your practice. You should start your practice in this. So just to probably tell you, if you are looking at the whole incentive regime end to end, whether it is practicing people in Maharashtra, so I can say hardly 25 or 30 chartered accountants in Maharashtra are practicing this. All over India, maybe a larger figure, but if you look at Maharashtra, it is hardly 25 to 30 practice CAs who are totally practicing into this. So as I told you, the intention is not probably that you may get mastery of all of this, but at least there should be a bell ringing when you hear something, when you are hearing any expansions, when you are people come to you for project reports and they talk about that this is an expansion happening, we are planning to do new manufacturing. A bell should be ringing, and you should come to know that there can be something where subsidies can be claimed. So with this broad probably outlook, I thought so we would start this, and just what's happening in the last 6 or 7 years. So that is a backdrop at where it starts actually. So you had that 1991 wave, you had that 2014 wave where a lot of things, positive steps have happened. So I will say three significant steps are there, three significant things are there when you are looking at why this Make in India and this has gathered some momentum. So one is this Make in India program, which was launched in 2014. Let me tell you, friends, I always say that Make in India was not a choice. Make in India was a compulsion. Because if you see, at this point of time, 65% of our population is below 35 years of age. So that's a huge demographic dividend what you are having. You are having this dividend because you have a young working population. Friends, you will appreciate that job creation comes from manufacturing. So if you don't promote manufacturing, this huge demographic dividend what you are having can turn out to be a demographic disaster if you're not able to give them employment. So that is something we need to keep our mind to. So, and if you want to provide that kind of a large-scale employment, something like a Make in India was required. So Make in India, I always say, whichever government had come, this was a choice and not a compulsion. They had to come up with something. So first was that. Second, in the last 6-7 years, I will say there's been a decent policy stability also, at least on the manufacturing space, I would say. And there are attractive incentives being given, and direct and indirect tax reforms. You had GST coming in. So I think so that has played a major part on this whole stability which has been coming in. And third, I would say, is the ease of doing business rankings. So if you look at the ease of doing business rankings for India in 2014, so ease of doing business ranking is something which World Bank ranks every year of around 180 to 200 countries, like where do countries stand on the ease of doing business ranking. So it talks about how fast can you form a company, how fast can you get an electricity connection, what happens during insolvency. So all those factors have been listed and an ease of doing business rankings is given. So at 2014, we were 132nd on this rank. And that is where somewhere it out of the 189 countries. So that was a very poor rank if you look at the length and breadth of this country. So somewhere efforts have been taken. And now after 5 years or 6 years, we are at 63rd rank, 62nd rank, sorry. So that's a very, very healthy jump, I would say. We have almost come to half. But still, are we at the end of the curve? No. So there is still a lot of work to be done. Now getting from 132nd to 63rd may be easier. But now to break in the top 50 would be very, very difficult because we have very, very competitive space out here. And this is something we need to see. So with this background, what was happening was that the constant push was towards making India as a attractive manufacturing destination. With this ease of doing business rankings of central government, or rather country as a whole, the central government in 2014 also started the ease of doing business of states actually. The states started getting ranked on how fast can they give a land, how fast can they give electricity. So on that basis, the states started getting ranked. And if you see, this is the current rankings of state which is there. So you have Andhra Pradesh at number 1, Uttar Pradesh at number 2. This is the latest ranking which is there. You may or may not agree with some of those rankings, but that's fine. That's a uniform mechanism which has been followed. So if you see, Gujarat is at number 10 and the state where we are, Maharashtra, is at 13, which is not appearing in this slide, but Maharashtra is at 13. So a lot of work to be done. But on the subsidy and these parameters, I will say Maharashtra is much better and we will come to those aspects later in the discussion. So suddenly what has happened is you have this spirit of competitive federalism among states, where states are fighting against each other for getting the investment to come in the states. So you have a big company coming from outside or even a domestic entrepreneur who wants to probably invest in India. So you will have Andhra Pradesh fighting for that investment. You will have Uttar Pradesh fighting for the investment. So a very, very competitive space is something what we are looking at this point of time. So these rankings have also assumed significance. And though these rankings you may feel are not very, very important, but if you think from an international investor perspective, these rankings play a very major part in seeing like what's happening. They will like to see like what's the ranking happening and whether we need to invest in that state. So from an international investor perspective, these become very, very important rankings to look at. So along with the various changes which have happened, or rather announcements which have come in the subsidies, I think so a significant criteria which was changed was the MSME criterion. So the MSME definition of in India for micro, small, medium enterprises were dated back to 2006 actually. So that seriously needed a change. So let's spend 5 minutes of what changed in this MSME criterion, who can qualify to be MSME. And then if you qualify to be MSME, we can spend 10 minutes on what are the benefits under MSME. And then we can go to the larger subsidies also. So what has been done now? So enterprises, the 2006 one, which was there, the enterprises were classified as manufacturing and service enterprises. And the earlier definition talked about that manufacturing enterprises having a plant and machinery investment of below 25 lakhs or below 5 crore or below 10 crore were rated as micro, small and medium. Now you have to forget all of this. So now what they have done, first of all, they have removed the manufacturing or the service enterprises bifurcation. For them now it's the same. And what they have brought is an additional criteria of turnover also. So what does the new definition, which is effective from 1st July 2020 and notified on 26 June 2020, is that you should have an investment of less than 1 crore, an annual turnover of less than 5 crore. You will you will consider to be a micro. Small will be 10 crore and 50 crore, and medium would be 50 to 250 crores. So here you will see, friends, the 250 crore turnover and the investment of below 50 crore, that's a very, very good limit and a huge limit. So you will see a lot of companies now falling under MSMEs and getting those benefits under MSMEs which are there. Otherwise, at a 5 or 10 crore investment, it was really difficult to get qualified as a MSME. 2 or 3 important points in this new definition, which we need to keep in mind, are that if you breach any of the condition, like if you breach the investment condition or you breach the annual turnover condition, like take an example of a medium enterprise where the investment if touches 52 crores and the annual turnover is still below 250 crores, you will not be qualified as a medium enterprise. You will move out of the MSME classification. So you need to satisfy both the conditions to stay in here. A good relief what they have given is on this calculation of this annual turnover, exports will not form a part of the annual turnover. And the third very important point where we chartered accountants can play a role here is, so there are 2 aspects again in that. When they talk about investments, which is 1 crore, 10 crore, 50 crore, it talks about investment in machinery, investment in plant and machinery, which will qualify. So let me tell you, if the total project cost is above 50 crores, but the machinery investment is below 50 crores, you will still qualify to be a MSME. And it is very important to stay in that limits to enjoy some of those benefits which are there. So suppose if I am telling you that your total project cost is 60 crores, right? Out of which land is 5 crores and building is 10 crores, and your machinery investment is 45 crores, you will still be a MSME. You will not move out of it because your machinery investment is below 50 crores. The second aspect, which is very, very important here, is the definition of plant and machinery as per the MSME Act is different from the definition of plant and machinery as per the Chartered Accountants Convention, what we normally have. So as per the audited balance sheet, if you see that the asset is a plant and machinery, don't go by that classification itself. There are many assets. So assets in the case of MSME would be those considered as plant and machinery will directly go in the manufacturing process. So suppose you have a material handling equipment, a conveyor belt, though you classify it as plant and machinery in the books, for a MSME, those are not plant and machinery, which is very, very important. So if you're a medium investor and suppose your plant and machinery as per balance sheet is 52 crores, just don't leave it at that. There may be a possibility that there is a generator for 4 crores, there is a conveyor belt of 5 crores, you will still be a MSME. So that is something which we need to keep in mind when we are assessing that. And who better than chartered accountants who can actually do that due to the grip and figures what we have out here. Now, how they are going to look at this plant and machinery thing. So the new notification states that the investment in plant and machinery will be determined as per the last filed income tax return. And in the case of a new enterprise, if there is no ITR available, the value of investment shall be based or taken on the base of a self-declaration until the year till the first ITR is filed. So when they talk about ITR, that clearly means that it is talking about net block. So whatever is your ITR figure as on 31st March of the previous financial year, that will be considered while assessing the value of the plant and machinery which is there. So that is something we need to keep in mind. Value of plant and machinery will be taken as per the income tax rules and shall include all tangible assets other than the land and building, furniture and fixture. So it is largely plant and machinery what we discuss. The purchase invoice net of taxes, that I guess is something normal which we see. The cost of certain items specified in explanation 1 to section 1 of section 7 of the Act. So that is exactly what we were discussing when we talked about that certain assets, though plant and machinery as per your normal income tax convention may not qualify to be plant and machinery as per the MSME definition. So please keep a watch on these kind of assets, you can still qualify to be a MSME. Now, if we move forward, this is simple slide. This is more on the Udyam registration. So earlier it was called Udyog Aadhar, but now it is called Udyam registration. So what are the documents what you require in the case of Aadhar or PAN card? A permanent ID would be generated. So this is, I will say, more procedural. One more important aspect out here, there was always a discussion going on that when we talk about a MSME registration, is it to be seen via an entity or via a project? So if you are seeing a large company which has a plant in Bombay, which has a plant in Nagpur, which has a plant in Gujarat, so whether you will look at this MSME limits per that plant or you look at per that entity. Now with this new process, I guess that controversy has been put to rest because you are talking of the last income tax return filed, and it is on the GST, what you have a common GST registration and on the basis of PAN. So I guess that has been put to rest now. So it will be if a larger entity is crossing a turnover of 250 crores, and though it is not crossing that turnover in a particular plant, that will still continue to be not an MSME. They will breach that condition of 250 crores, so that will not be an MSME. The last date of filing this scheme under the Udyam was 31st March, which I guess has been extended now because of this COVID thing. Now let's touch upon briefly on what are those benefits under MSME and what needs to be seen. So obviously, and I'll not go much on the banking part, I will look at the other incentives because banking then again becomes a very, very large topic to look at. I'll touch three or four major of them. One is obviously the priority sector status, where as a priority sector, you can get borrowings from banks or other financial institutions also. There's a very good one of the TREDS platform, which we will discuss slightly more in detail. There's also a timely payments thing, which I guess is the most important benefit of MSME, which we'll like to go slightly in detail. There's also procurement policy. So if you look at this tenders floated by the central or state governments, they are expected to have a certain percentage of buying only from MSMEs. So if they have floated a tender of 100 rupees, so 15 rupees is a compulsory buying which needs to come from a MSME. Now, this is very, very important. And if you see, many of these MSMEs are not aware about this. So if you have clients which are manufacturing MSMEs, which are producing products which may be used by government or other companies, you'll have to check whether these clients are aware that this kind of a clause is there with almost all the PSUs, central ministries, department, and I will say most of the state governments also. So this needs to be promoted clearly. And also in benefited tenders, which is there where a tender fee is not levied, but that I still say would be minimum. The three important would be the TREDS platform, the timely payments one, which is quite elaborate, I would say, and the procurement policy where a certain percentage of that procurement needs to happen from this source, the MSME source, which is there, which is very, very important. So we'll discuss slightly in detail on the TREDS and the timely platform mechanism. What is TREDS? So TREDS is a trade receivable discounting system. So though this looks at a very hi-fi thing, this is similar to your bill discounting which you see. So what will happen here? The trends was launched by RBI in order to improve the cash flow of the MSME suppliers. The system which is accessible online, there are three exchanges. So RBI has got a certain competition amongst all of them to really see who can make use of this platform actually. So how this really works is we need to see. So there are three platforms, which are three exchanges, which is first one is the RXL, which is a joint venture between SIDBI and the National Stock Exchange. There is Invoice Smart between Axis Bank and M Junction Services, and there is an Unone exchange provided by Mind Solutions Private Limited. So when a transaction is conducted between a supplier and buyer, the receivable is locked into the system. So suppose you have a MSME client who is selling it to a large player, the receivable, the invoice can be logged into the system. Then there will be a bidding between these three exchanges. And then they will give you the best value of discounting, which the MSME can then select. So the supplier is able to view all the bids placed by different financer. And then the supplier selects the best bid. The amount is received within 2 to 3 days. And on the regular due date, the amount is debited from the buyer and transferred to the financer. So as I see, if you see the intention here, this is nothing more than a bill discounting, but how they have done it and how they have really made it very, very effective with the online kind of a platform, I guess it is very, very important here. So awareness needs to be there. People are aware of this, but the competition angle where they have brought this whole three exchanges into place and how they are actually able to avail these benefits, I think so this is very, very important. And this will largely ease the cycle. And it's a very competitive bidding which happens between these three exchanges also. Now, this, according to me, the early payment is something which is the most significant benefit or given to a MSME or sort of a incentive, I would say. So what happens here is when the MSME sells to a large player, they have this agreed credit limits, which are there as per the purchase order. So that way you will get this payment within 60 days or 90 days or 120 days or whatever it is. And what we have seen also that after 60 or that 90 or that 120 days, the larger suppliers are not able to pay to MSME, rather they don't pay to MSME and the payment gets delayed. And MSME then somewhere gets into this whole vicious cycle actually. And they are never able to come out of that working capital loss which is there. And the cycle get disturbed and funds get disturbed and somewhere the expansion doesn't happen. And it becomes a very vicious cycle from which MSMEs are actually not able to come out. Now, this is where this whole aspect of registration among the MSMED Act becomes very, very important. Now, if you are a MSME who is registered under the MSMED Act, the Udyam registration, what we saw, what does this benefit talk about? It talks about section 15, where buyers' liability to make payment. So whether there are large companies or whether there are any other companies, they will have to make the payment to MSME within 45 days. Whatever are your terms of the contract, whether they are 60 days or whether there are 90 days or 120 days, the deemed date of acceptance has been taken as 45 days. And they have given a grace of 15 days for some of the aspects, but somewhere you can say 45 plus 50, 60. It cannot go beyond that. So because even if they put the date as 45 days, see somewhere MSME wants to do business. So even if the larger manufacturer says, no, I'll to pay you in 90 days only. Tumko jo karna hai kar lo. So that is why this deemed date has been brought in. Aapka jo bhi limit rahe on the purchase order, whether it is 90 days or 120 days, MSME Act ke hisab se, the deemed date of acceptance will be taken as 45 days only. And when you make the payment after 45 days, there is an interest on that delayed payment, which is a monthly compounded interest liability. which these large companies will have to pay to the MSMEs. The payment to the MSME needs to be paid with interest rather. It needs to be paid with interest. And the bigger part is this interest what they pay is not deductible under the Income Tax Act 1961. So you had to pay 100, along with interest you are paying 120. This 20 which is there is not allowed as a deduction. So friends, when you look at the audit reports, or rather the tax audit report, if you remember, there is a clause there that payments to MSME suppliers and where interest has been paid. So as a tax auditor, you are expected to report on that clause and say the government that this is where the interest has been paid and the same needs to be disallowed. Now you will say कि ये really कहीं पे ये होता भी है क्या? These kind of acts are there, and really is there an implementation mechanism in place? So if you see annual reports of very large corporates, you will see interest payments of 3 crores, 5 crores being made on this account to various MSMEs. And I'm talking of very large companies. I may not name them, but these are very large companies where it's a public document, the audited accounts. So you will see very large payments being made under that. But still, is the awareness there? I will say it is lesser. So we as professionals have the prime responsibility to rather educate your MSME suppliers that this kind of a clause is there. What did the government do from their end? One is obviously in the tax audit report, you are expected as auditors to report on this, that there is a MSME and it has not been paid along with interest, though that 45 days clauses is there. If you see normally as an audit procedure also, out of the creditors, you mark the MSME supplier and you send them confirmations that please send your MSME certificate to which is there. What did the MCA do in this? So for this large companies now, and this was a provision which was there, now you need to file half-yearly returns. So this provision came on the notification of 22 January 2019, which is also a 2-year notification now. So they came up with the concept of a half-yearly return actually, where companies have to file their delay, where to show their delay, that where they have delayed this payment to MSMEs on suppliers which they were knowing as MSMEs. So what would a company do? Of the list of suppliers, they will send a notification or rather a letter to all of them that please let us know whether you are a MSME supplier. It will be the responsibility of the supplier to send the certificate of Udyam to them that yes, we are a MSME supplier. And once that certificate has been given to them, you get registered as a MSME supplier in the books of the large buyers, whether larger this OEM, and then the company cannot default in your payment beyond 45 days. And if they do it beyond 45 days, so you will have an interest payment which is disallowed. And with this notification, if you are not filing those returns correctly, I guess for companies now this becomes a matter of a corporate governance also, which I will say is very important. What were the other measures also? So government has also started 2 portals here, which is MSME Samadhaan and MSME, I would say, Sambandh. So what is the intention of this portals? So Samadhaan is precisely what we were talking about of this ensuring that the payment has been relayed in time. So this act as a sort of an arbitrator here, and they will intervene and a timely judgment will come and it will be ensured that you get a benefit under this portal and your payment has been received. But who can apply under this? Who are having a valid, Udyog Aadhar was the earlier one, who can have a valid Udyam registration. And MSME Sambandh portal is the one what we are talking about procurement. So you get registered with the Udyam registration on this. And total procurement as on date, like this is somewhere older data, I would say. So 1,06,000 crore kind of a procurement has been happening to this portal. So it's going on very effectively, I would say. So it will be very, very important for your MSME customers or clients to actually get benefit under this. So if you see the whole MSME registration and the limits which have changed, and you will see many CAs practicing under this. So it will be very, very important to educate your clients on what is the new MSME definition, what can be actually claimed under this, what are the various benefits. And as I told you at the start of the discussion, you may not practice under this, but it will be very, very important that your clients are actually aware of what's going on and whether they will be able to claim any of the benefits under this scheme which are there. Now let's move more granular on what are the type of incentives which are there. And incentives in India are given by the central and the state government. So if you look at the state incentives, there are all the states which do give incentives. And we sitting in Bombay, we feel that these kind of incentives are not really available in a Bombay, or these are available largely to a unit in a Kolhapur or Satara or Sangli. But that's not the case. And even if that is, we can discuss about the professional opportunities on this also. Largely, if you see state incentives in India, they have been bifurcated, or rather given in 3 buckets, I would say. So you have the capital linked subsidies. Now, what are those? So here what happens is a percentage of project cost comes back to you as a subsidy. Now, that project percentage may be 5%, 10%, 15%, 25%, which will have an upper limit sort of, which will talk about that the overall incentive cannot cross 5 crores or 10 crores or as the case may be. So this capital linked subsidies become very, very important because straight away this reduces your payback time and reduces your project cost because this is something you get as a subsidy. Capital linked subsidies in India are also given by central government also. And we will come to some of the central government schemes also. Second subsidy, which is very, very prevalent, is the expenditure linked subsidy. Now, what are those expenditure linked subsidies? Are a reduction in your power cost, your stamp duty, your property taxes, your other taxes which are there. So there can be either be an exemption here or a cashback, like reduction in your power tariff. And if you see some large power guzzling units, this can be a very, very important subsidy to look at. And third, and the most important one, are the sales linked subsidies. And this has in the last 3-4 years become very, very interesting. And you will see how states have moved ahead of the curve on this sales linked subsidies. So what happens here? And if you total all the 3, you can at least look at 75 to 100% of your project costs coming back as a subsidy over a period of 8 to 10 years. Now I'll tell you how this, and the largest component of this will be the sales-based subsidy. Now, how does this work? Suppose you're coming up in an area which is notified and the project cost is 10 crores. I'm just taking an example here. And the subsidy rate in your region is 60% over a period of 10 years. So what will happen here is 10 crores into 60%, which comes to 6 crores over a period of 10 years, right? So what will government do is whatever SGST you pay to the state government will come back to you as a subsidy, subject to a limit of 6 crores. Let me probably break it more granular. So your project cost is 10 crores. And I'm talking specifically of Maharashtra, your percentage is 60%. Your subsidy is 6 crores divided by 10 years, which comes to 60 lakhs. So aapka yearly limit became 60 lakhs for availing those incentives. How do you avail that incentive? Is whatever taxes, and when I talk of taxes, it is only SGST just now. Because see, what goes to the state treasury directly is only SGST and not CGST and IGST. That goes to the central government. Though latter there is a share which comes to the state government, but this scheme talks about only the SGST at present. So it is not that you pay the SGST lesser. You pay the same SGST as per your GST laws which you pay to the state government. You keep doing the same compliances there. At the year end, you get this subsidy back from the state government. You have to apply and you get this subsidy back from the state government as a subsidy. The SGST portion of that comes back to you. So if you see this whole SGST mechanism in the subsidy, this becomes very, very important for planning. So you will have a comparison, a company will come to you, whether we set up the plant in Maharashtra or whether we set up the plant in Gujarat or whether we set up the plant in Madhya Pradesh, and we will come to more granular of how all that works. See, it will be very, very important to just not look at the announcements which are there of this policies. कि आपको इधर लगाओ आपको 50% मिलेगा, आपको मध्य प्रदेश में लगाओ आपको 100% मिलेगा. But what do you actually get? So in your example, what you saw of 10 crores, 60%, 6 crores, 6 crores is actually a bearer check, you will appreciate. How much you are going to actually encash will depend on what is your sales in that state. So let us assume if the sales in your state is zero, then what are you actually get? You are actually going to get nothing because your SGST contribution to the state is zero. So though you have a bearer check of 60%, your availment is zero because you have sold none in the state. This becomes, friends, very, very important. So let's not look at the larger figures. So there have been some opinions also given that Maharashtra is giving a 60% subsidy and Rajasthan is giving 100%. Then definitely 100% Rajasthan is much better. So you have seen units actually shifting to Rajasthan, but then realizing that our local sale to Rajasthan mein kuch hai hi nahi. So your availment is zero. So this is something you need to keep in mind. And I'll tell you as we move further how a states actually move that bandwagon. And Maharashtra and some of the states, how they have become so competitive on this with some newer subsidies. So what are the important points you need to keep in mind when you are evaluating state subsidies? One is absolutely the location and amount. So here, largely the state incentive would be broken up into whether you are a MSME, whether you are a large scale or whether you are a mega. And the benefits in most of the policies are larger for MSMEs. So that is how it will work. If you qualify to be a mega, and mega project in Maharashtra is based on your investment and your employment, at least in Maharashtra. You can actually negotiate with the state government on incentives. So if there are certain benefits which are available as per the policy, you can tell the government, no, I want something higher than this. So that is a power giving to the higher power committee who can decide this. It will also depend on which location do you come in. So naturally, if you're talking from a Maharashtra perspective, incentive would not be high for a Bombay or a Pune, but it will be high for a Aurangabad or a Nagpur. So are incentives not available at all for Bombay, Pune? No, that's not the case. So till the recent policy, Bhiwandi was considered as an investment zone or an incentive zone rather. Wada near Thane is Jawar and those areas are considered as a investment incentive zones. And we will come to those percentages also. So around Pune also there are many zones. Yes, and around Kolhapur, Aurangabad, Nagpur, so I will say most of the state qualifies to be under this incentive zone. So don't be under the impression that this is largely being available to backward zones. This is also available here also. And the important part over here is if you look this a bit professionally as an opportunity or the way you want to look at this, see somewhere what's going to happen, largely what you see. So even if a CA is there in Kolhapur or Sangli practicing into this, and the project cost is suppose a 70 crore or 80 crore, I'm just taking an example. All this functioning of subsidy for a large project happens in Bombay, in Mantralaya and the new administrative building which you see near Marine Lines. So that is very, very important for friends in Bombay. You will appreciate that People come all the way from Nagpur, chartered accountants from all the way from Nagpur and Aurangabad, Kolhapur or Sangli come to Bombay, meet the officers, where they may need to stay here and do the work. Now, why chartered accountants in Bombay cannot network back with these chartered accountants in tier 2 cities and actually have a healthy practice out there? And I'm sure during your coaching classes and all that stuff, you must have friends of these areas who are actually practicing out there. So this can become a very, very good successful model. Yeah, it takes time. Any practice to set up takes time. But this is something as professionals we need to keep in mind. So location becomes very, very important. But as a professional opportunity, don't think that because we are in Bombay or Pune, most of it will not be available. Second is sector. And this also becomes very, very important. See, all the state policies are covering all manufacturing sectors in India. So there is some bit of a negative list like gutka or tobacco or those kind of industries or liquor don't get kind of a benefits. But otherwise, all the sectors covered into manufacturing do get the benefits. Now, the state also has certain thrust on certain specific sectors, I would say. So you have defense aerospace, you have electronic and design manufacturing. So these are the specific sectors. Now, if you are manufacturing under those sectors, textile, so if you are manufacturing under those sectors, you can actually claim those incentives and it will not be based on a zone. So even if you have set up in a Bhandup or a Mulund or a Bhiwandi, you will be eligible for those incentives because that will not depend on a zone because it is a sector specific policy. So if you are coming up with a textile unit in Bhiwandi, you will be eligible for that subsidy, though you are not falling in a sector because sector specific policy does not depend on a geographical zone. And obviously sale pattern would be very, very important to see how you can actually maximize your benefits, how you can maximize the sales in the state of Maharashtra. And as professionally, you see, who better than chartered accountants who can actually do this? And also certification of this whole investment and everything. So let me tell you, friends, the whole certification work under this scheme, Reliance has been placed on chartered accountant certificate only. So it is not that the department sends any authorities to physically verify. They can send, they do send, but the reliance is played on the chartered accountant certificate. If the chartered accountant says that this is the value of investment which has gone in the factory, that is largely considered as the investment certificate. So that's also very, very important, which we need to keep in mind. So with this background, if you see here that what are the various subsidies which come from a state government, we discussed about the state goods and service tax, the SGST reimbursement, which comes as a sales subsidy. You have a capital subsidy. You have an electricity duty exemption or a tariff concession, stamp duty exemption, interest subsidy, skill subsidy. So these are the various subsidies which do come in. Now, there is, as I told, you have a possibility for negotiating, but this would be largely for, I would say, mega projects. So we have a very competitive federalism among states where you can do this comparison between what are the various state incentives available, comparison of the policies and incentive across states, opting for a suitable state, evaluation of obviously the other location parameters, and then negotiating with the state government. So what happens here? This happens typically like an employment negotiation. Like you take a job offer from a company and then you go to the other company, this is the offer what I have received, can you get a better offer? So this is what larger companies do. And this is on not only on paper, this also happens practically in many of those enterprises. Now, as we are sitting in Bombay, I thought so we can briefly cover the incentives which are there in Maharashtra and Gujarat. And because these are the two states where normally, so many of this headquartered in Maharashtra, also the plants are in Gujarat. So I thought so it would be relevant to cover them in the next 10 minutes or so, because this can be a relevant area for our practice also, what we are looking at. So as we discussed, the incentives in Maharashtra, and these are the taluka and the classification zones which are there. So you have a zone, you have a B zone, C zone, D zone, and D plus. And largely these are basis on the index of development, I would say. So A and B would be Bombay and Pune largely. C would be your Bhiwandi. D would be something like a Kolhapur, Sangli. D plus would be Aurangabad, and with our Marathwada and all that has been bifurcated. So you have a Ratnagiri, Sindhudurg, Dhule, and there are also these other nationalism affected talukas. Now, what is ceiling as a percentage of fixed capital investment? So it talks about 30, 40, 50, 60. So if you are talking of a D plus and Vada near Thane falls under D plus, you can actually look at 60% of your project cost coming back as a subsidy. Friends, you will appreciate 60% is not a small amount. And if you talk about these incentives to any of your, I will say, clients, they will be really happy to explore this one. And the eligibility period, as we talked about, it is 7 years to 10 years as the case may be. So if you're a food processing industry, you will receive an additional 20% than what is being given here, and a 2 years extra. So it is very, very important that you qualify these criteria and you are eligible for these subsidies. Now, does it mean that a unit which has been set up new only get the subsidy? So you have set up a unit in Vada in 1980s, and now you are not. Now you are planning to do some expansion, so you will not be eligible. So expansions also does qualify as a subsidy, and expansion has been defined in the policy. So if you satisfy those expansion criteria, you are eligible for the benefits under this scheme. So that's very, very important on the expanded portion. So suppose your existing block was 20 crores, and now you have come up with the additional investment of 20 crores. So on that additional block of 20 crores, you will be enjoying the same subsidies, assuming that you are a newer one. The quantum of subsidy may be a slightly lower, but otherwise, I will say the crux and the principles remain the same. Now, where is Maharashtra taken a lead here? And at least for MSME enterprises or the smaller enterprises, I would say, it is giving you a percentage, 100% gross SGST back and not net SGST. So mark my words, friends, this is very, very important. And what we have done here is also kind of an example. So normally all the states do give you net SGST back. What does Maharashtra do? So total sales in the state you assume to be 10,000 rupees. Gross SGST based at 6% is 600 in both the examples. And there is an input set off. We have this input set off maybe on capital goods or purchases or raw materials or expenses. So suppose 227.5 is your input set off, and 372 rupees is actually what you have paid to the state government as SGST. So 600 is something which you charge, and 372 rupees in something which you paid to the state government, right? Depending on what was the input rate and all that stuff. Now in Maharashtra, the incentive is given on this 600 and not on 372.5, which is the net SGST. Maharashtra for a MSME sector is giving you incentive on gross SGST and not net SGST. This, friends, according to me, is very, very important. So you will be actually able to avail those subsidies rather than that subsidy just being in paper. क्योंकि लोग बोलेंगे कि मेरा तो यार net SGST इतना पे ही नहीं होता है क्योंकि मेरा input set off ही काफी है. So that's not relevant because you are being given a gross SGST. So even if you are selling 15 to 20% of your produce in the state, or 25%, you will still get a decent amount of subsidy in that bracket. So because the subsidy is based on gross SGST and not net SGST. So I hope you understood the difference, and this is very, very important, I would say. Now, what are the other MSME benefits which are there? So again, this classification of A, B, C, D, D plus. So other than this SGST part, and this is again MSME subsidies, because largely, see, if you see as a practice area, you will have most of these clients falling under this zone. So what will happen here is, again, other than the gross SGST benefit which you saw, you have 4 other subsidies in Maharashtra. You have a power tariff, you have an electricity duty exemption, you have a stamp duty exemption, and you have an interest subsidy also. And we will quickly cover some of those, so which will actually help you to understand how they work actually. So what is electricity duty exemption? So electricity duty exemption is somewhere where if you go through the electricity bills in Maharashtra, there is a concept of a duty which is 9 or 9.5%. This is made totally exempt to you. This is not levied at your bills at all. So that reduces your electricity bill by 9 or 10%. There is also a power tariff subsidy, which is 50 paise or 1 rupee. So one is the duty and second is the tariff. So if you see, you can actually reduce the bill considerably. There's also stamp duty exemption. So what it talks about is that whatever stamp duty you need to pay on purchase of land or lease of land, long-term lease of land, the same would be exempt to you. Mark the words, friend, it is exemption. So if you have paid it, it's gone. So you have to plan it accordingly, that if you are setting up a unit, suppose in a Kolhapur, Sangli, Vada, wherever, you will be able to claim this stamp duty exemption. So you need to start the planning 2-3 months back and actually avail this stamp duty exemption benefit which is there. And the fourth one is very, very important. This is an interest subsidy. So suppose I have taken a loan of 10 crores, take an example, and my rate of interest is 12%, and the interest what I have paid during the year is 1.2 crores. This clause talks of an interest subsidy of 5%. So on that 10 crores, the 5% comes to 50 lakhs. Mark my words, friends, it is not 5% of your interest paid. It is 5% rate of interest subsidy. So the 12% which is there as your gross rate will, after this 5% reimbursement, will effectively come to a 7 or a 7.5%. Very, very interesting subsidy and a very, very good subsidy, I would say. So just to probably recalculate the discussion. So if you are setting up in Vada, you will get 60% back. How would you get this? You will get by measures of a gross SGST, the example which we saw, interest duty, stamp duty exemption, electricity duty exemption, and power subsidy. Now just add more flavor to this. The stamp duty exemption and electricity duty exemption are over and above that 60%. So for an MSME, these are over and above that 50%. So very, very interesting to look out here for these subsidies. Obviously, the scheme will have its nitty-gritties and notifications which we need to study, but largely this is the contours how the scheme will work. So you can expect a 60 or a 50 or a 40% project cost coming back to you by way of a subsidy. Now, moving ahead, and if we look at large-scale industries, so large-scale, what are large-scale, what are special large-scale has also been defined. So here you get a subsidy in a zone of 25%, 25%, 40%, 60%, as the case may be, 70, 80, 100, as the case may be. What is important out here is, in the case of a MSME, where you were getting 100% gross SGST, here you are getting a 50% gross SGST. Friends, you see the whole calculation may differ a lot. So why to stay under MSME would be very, very important, because this is somewhere the whole calculation may change. So if there is a chance that the unit may remain in a MSME only as per the newer definition, it would be very, very relevant to continue as a MSME, because somewhere if you see in a large scale or a special large scale, it is 50% gross or 40% net, whereas MSME, what we discussed, was a 100% gross. So that is something we need to keep in mind, obviously. And I'll be circulating this slide, and I've already rather circulated it, and you can send it to your members also, so they can see this various percentages which are available. Quickly, what we will do is also see what is available in Gujarat actually, and why the Gujarat subsidy is also there. So Gujarat also had a SGST based kind of a subsidy, where it was talking of a percentage of investment coming back to you by way of whatever SGST you pay to the state government. Now, what was happening is many of the units were saying कि आप तो SGST based subsidy दे रहे हो, but क्योंकि मेरा सेल ही गुजरात में बहुत लिमिटेड है और आई एम हार्डली हैविंग एनी सेल आउट हियर, इसलिए मेरा अवेलमेंट कुछ नहीं हो पा रहा है. And that was, I think so, a genuine concern with all the states, I would say. So Gujarat, what they did along with Madhya Pradesh, so Madhya Pradesh was the first to do it, they brought up a subsidy which is not linked to taxes now. So what they have done here is they have converted that into a fixed capital subsidy. So the percentage what you see here, so of your eligible project cost, you will get a 10% straight capital subsidy. So if you are set up a plant of 100 crores, 10 crores is something you can get as a straight capital subsidy. There were a lot of representations going on that these percentages are a bit lower, and honestly, these are a bit lower. This could have been a bit higher if you look at the other states. But yes, this is what it is. So a percentage of 10, 8, 4 comes back to you as a subsidy. So this will not then depend whether you are selling in Gujarat, outside Gujarat, or exports or whatever. You are going to get this fixed kind of a capital subsidy. So friends, you will appreciate the model is very, very good. We are talking of a clear capital subsidy coming back to you. But I'm sure the subsidy could have been a bit higher out here. And here also it talks of an electricity duty exemption for a period of 5 years. The same concept what we had in Maharashtra. So very, very good subsidy to avail. And this came on 6th August 2020 in the COVID regime. So if you are a company headquartered in Bombay, you will have many of these units which are in Vapi or Ankleshwar or areas. So here also what they have done is they have divided Gujarat into zones. So category one is the underdeveloped like Kutch and those areas. 2 would be largely around, I'll say, Rajkot and those areas. And 3 would be around Ahmedabad, Sanand and those areas which are supposedly developed. So this is how it will work as a subsidy. Now, if we move ahead and these are the thrust sectors. So the percentage is a bit higher when you are investing in thrust sectors, and they have listed out these thrust sectors out here. Just to probably sum up the state incentive discussion, and then we will go to the central incentive discussion. If you look at the state incentive, friends, here, if you see state, we discussed the concept about competitive federalism, where states are fighting for those kind of investments actually. So Maharashtra, if you see, actually bought that concept of gross SGST reimbursement and not net SGST. That makes a very sea change on the whole benefits when you are looking at. Then we discuss something like a Gujarat, which is a fixed capital subsidy model. And now, which has been actually being accompanied after Madhya Pradesh. So Gujarat bought this policy after Madhya Pradesh. Madhya Pradesh has brought up a flexible capital subsidy model where this would depend on largely, I would say, 4 factors. What is your employment? What is your capacity? So those kind of factors it depends on, and you can get at least 35 to 40% of a project cost back as a subsidy over a period of 6 or 7 years. So I will say it's a very, very good subsidy model in Madhya Pradesh, which is there and which we need to look at. Third a good subsidy which has come in the COVID period is Karnataka. Now, what did Karnataka do? Karnataka actually has linked the sales model to your sales turnover actually. So what they are saying here, 100 rupees is your project cost, right? We will give you 60% or 50% subsidy. Suppose that comes to 50 crores. How we will give you back? So over a period of 8 years or 9 years, depending on which zone you are, we will give a percentage of your turnover back as a subsidy. It will be 1.75%, 2% of your turnover. Now, whether that turnover is within Karnataka, outside Karnataka, or exports, does not matter. So you will see, friends, a very, very good subsidy to really look at. And Karnataka has really moved ahead on the loop if you look at this one, because they are talking of a subsidy which is based on your turnover and not depending on where you are selling it. So you are linking it to a production and incentivizing that production. And last but not the least, I will say on this section, Jammu and Kashmir has come up with a new policy on 1st April 2020, where they are saying that 300% of your plant and machinery would come back to you as a subsidy. So what do they say here? That suppose your project cost is 100 crores, out of it plant and machinery is 80 crores, 300% of plant and machinery, which is 240 crores, will come back to you as a subsidy. And how will they pay back to you? Over a period of 10 years, whatever is the gross SGST, the gross CGST, and the gross IGST, all the three will come back to you as a reimbursement. Fantastic scheme, I would say. So this is a central government scheme, and they wanted to promote Jammu and Kashmir and make a statement out there. So almost 300% of the project cost is coming back to you as a subsidy. So especially if you have clients in the food processing, pharma, these spaces, I would say it would be worthwhile to tell them that this is a new policy and you can really take benefits under this one and get eligible under this policy, because this is, I will say, one of the best which has come in recent times. After the discussion on the, and some considerations here, so talking point with clients as professionals, and friends, at the end of the state incentive discussion, as I told, we'll move to the central, you'll realize that you have a lot of talking points here when you're talking to clients as professionals. There are a lot of points which become very, very important, like talking to clients about what are your investment plans, what is your expected employment, what are your state preferences. Then you can say, sir, have you seen the Jammu and Kashmir one, or have you seen the Karnataka one, the sales and procurement pattern, assets to be installed, various state sector policies. And you can, some of these sectors, you can get policies both from center and from state also. So it is not that once you have claimed anything from the center, you will not be claim anything from the state. So those are dual benefits which are available to you. And what we talked about was the various sector specific policies also. So take an example of tourism. So manufacturing has subsidies in all the states, but even some of the state, tourism is also given a subsidy. And why those are given those subsidies? See, because tourism is also a very, very important economic activity. Lot of employment gets generated by tourism, if you see. So take an example, if you set up a hotel in Maharashtra, or this ad labs, you see that Imagica, or a water park, you will get a percentage of your project cost, almost 100% of the project cost, which will come back to you as a subsidy. Whatever SGST you contribute to the state government will come back to you as a subsidy. I will say again, a very, very good subsidy to look at. So keep your ears, eyes open to these kind of discussions which do happen. And you will say, what is the intention to probably promote tourism or give it as a subsidy? Obviously, one is the employment, and obviously it increases the whole tourism revenue also. You have subsidies given for even shooting in that location. So if you see the recent Bollywood releases, you will see many of those films getting located, or rather shoot in a Madhya Pradesh or a Uttar Pradesh or those locations. This is because they offer you incentives. So you will have state policies of Madhya Pradesh or Jammu and Kashmir or Uttar Pradesh, which actually give you incentives for filming their uh, movies out there. Why this is being done? Obviously, the tourism, if you show in a movie, in a Bollywood movie, the whole dynamics changes, you will appreciate. So if you take an example, if you look at Rock On 2, they were paid a very, very handsome subsidy to shoot their songs outside Gateway of India, because they wanted to promote Gateway of India in the tourism. And once it comes in a Bollywood movie, that is something to be looked at. So what I'm trying to probably put out a point here is there are various subsidies available, and sky is the limit when we are looking at these incentives, I would say. Now we will quickly cover the central level incentives also in India, which are available. And this is also a very, very interesting space to look at. So I will say largely, if you look at the incentives from a central perspective, then we will take only 2 or 3 aspects because rest all are largely related, I would say. So center also has sector specific policies. So we have incentives which are linked to production, or the PLI, which you must have read in newspapers, the production link incentives which are there, which become very, very important. Then there are on imports, there are project import scheme, there are FTAs. But what we will be discussing today is slight bit on mover, which is a very, very good scheme to look at. And if you look at that one, this has become really very, very important to actually incentivize manufacturing in India. And there's also the income tax, lower tax rate, which is, I guess, again, very, very important. So what we will be looking here is some aspects of PLI, the lower income tax reduction rate, and also this mover scheme, which is there, which I guess is very, very important. What is mover? So this is manufacturing and other operation in warehouse regulations, which is now given a short form of mover. What is the scheme about? So don't go by the name that this is a warehouse. You need not set up a separate warehouse. This can be a demarcated area in your factory, which will be converted into a bonded store. What happens by that? So normally, if you are importing in the country capital equipment, you normally pay excise duty and you pay GST also. Now, if you have taken this bonded area license, so this is a separate license you need to apply with the customs department, you did not pay this duty at all when you are importing. Friends, very, very important. This scheme does not depend on which location you are, which state you are. This can be taken anywhere in India, which port it is coming from. It does not depend on that. So is the duty permanently exempt? No, the duty is deferred. So what happens today? Suppose you have bought a machinery for 100 and the custom duty and this included GST is 25%. So you pay 25. So in this scheme, if you are having that license, you will not pay that 25. So when will you pay that? You will pay that when you are disposing of that capital asset. Now, normally, friends, if you see the disposal of a capital assets after the end of the useful life will happen after 10 or 15 years. You save that duty for that 10 or 15 years, and you will pay this duty at the end of the 10 or the 15th year, right? So what you have saved, the interest cost and the time value of money, the 20 rupees which is there today, what will be this value after 20 years or 15 years? Peanuts, right? And this scheme also came in October 2019. And let me tell you, friends, even 50 or 60% or 70% of the professionals are also not aware of this one. Why this was being brought in? This was being brought in to make India as a manufacturing destination, and whatever capital equipment in India is coming in, to make it virtually tax-free. So this, if you see, it's virtually tax-free. You are not paying any interest-free, and you are not the time value of money, right? Obviously, which is very, very important. Now you will say that there will be you will say there were earlier EPCG scheme also which is there, but there the friends, it was there was an export commitment out there. So whatever duty you were saving, you should have a 6 times export commitment, which is not there in this scheme. Even if you are selling domestic, you will not be having any export commitment, which I guess is a very, very good point to look at. And even second-hand machinery imported can be imported under the mover scheme. You will still be exempt or deferred that duty. I will not say exemption is the right word. It's a deferral of duty, but a fantastic scheme. So if you look in the first 5-6 months, people were not very willing or understanding कि ऐसा कैसे हो सकता है कि ड्यूटी आपको लगेगी ही नहीं और आपको 15 साल के बाद ही भरना पड़ेगा. But this was too good to believe. But yes, we have got it clarified, and now people are availing. And especially if you see in the last 1 year, many licenses have been issued under this scheme. And there is no monetary limit to this. Okay, again, to put out a very important aspect, there is no monetary limit to this. कि आपको 10 करोड़ के ऊपर का ही मशीनरी है तो ही आपको ये मूवर का बेनिफिट मिलेगा. Even if the investment is 3 crores or 4 crores or 5 crores, all can claim benefit under mover. So many licenses have already been issued under this. The scheme is also for raw materials. It is not only for finished goods. But raw materials में क्या हो जाएगा? They will allow you this deferral period only the time the raw material is not put to the production process. So suppose you are buying the raw material today and it is imported today in May, and you are putting in the production process in June or July, you will have to pay the duty at that point of time. So probably just the interest cost saving for 1.5 or 2 months, depending on what your sales cycle is. But I will say, from a perspective of a capital goods, this is very, very good scheme. And just because you have taken a license, it is not compulsion on you that you should invest, you should import both capital goods and raw material. It can be only capital goods also. The choice is yours. And I will say for a capital good, this is a very, very good scheme to look at. So please make use of this benefit, I would say. This is just simply, we have tried to illustrate and tell you that what it is. So 90 is the cost of plant and machinery clearance paid. Final cost is 100. So in the case of a basic custom duty, it will be 0. So what you will be paying is only 100 today. Duty saving and deferment will be 27.75, assuming the rate is 27.75. So what you will not pay today is the basic custom duty, the social welfare surcharge, and the import IGST. All the three you will not pay. And the deferment, it's of 27.75, which you will pay at after 10 or 15 years, depending on what is your useful life. And just one more important point, if the machinery is exported again after use, the duty payable is 0. So in lighter vein, we also hear public saying that एक काम करेंगे कि आज के दिन में duty बचा लेंगे, and तब फिर bill of entry कुछ बांग्लादेश या कहीं का काट के, we will not pay the duty at that point of time also. So let's not get into that aspects, what happens after 10 to 15 years, because already a significant amount of duty is already saved, I would say. This is the newer one, which you will be reading in newspapers, which is production linked incentive scheme. So the intention here is create global champions. So if you see how this was there in Korea 15 years back, so or 20 years back, where they wanted to make Samsung, LG, Hyundai as the global champions. So government gave them a lot of subsidies to this global champions, and they told them, can you go and conquer the world and compete on a global space. So somewhere this production link incentive scheme has also come in. This has come in for 13 sectors actually. And these are the champion sectors with the overall objective of what we say as Atmanirbhar Bharat, what we have been reading. So dependence on other countries, at least on the manufacturing space, needs to be reduced. How does the PLI scheme work? And PLI scheme works on a basic fundamental of that you produce more and you will get those incentives. So how it will work at is that suppose for all the schemes, they have kept the base year at 31st March 2020. So suppose as on 31st March 2020, your sale was 100 crores, right? And now your sale is 150 crores. So on that incremental 50 crores, what you are having, you will have an incentive which will range from 5 to 10%. And this will be a subsidy for a 6 or 7 year period. So most of the subsidies of the 13 sectors are there from 2021-22 to 26-27 or 27-28 as the case may be. So for all the 6 years, whatever is your incremental turnover, you will get a percentage back. So again, incentivizing production is what needs to be looked out here. And a fantastic scheme. The intention was to build in, as I told you, champion players under this. But in some of these schemes also, of these 13 sectors, you have MSME coverage also. At least on the 3 sectors which we are seeing, which are largely MSME driven, you will see smaller companies also getting into this. The total budgetary allocation for these schemes has been a healthy 1,97,000 crores, which is seriously large amount and very, very well managed and administered scheme, I would say. So out of those 13, 4 are already done. So if you see the mobile phone and specified electronic components, critical medical drugs, manufacturing of medical devices and IT hardware, the 4 have already gone. And somewhere, if you see, lot of investments have come into this. So if you look at the mobile phone and specified electronic components, you must have seen that this Apple is planning to produce more phones in India through its contractors, which are Wistron, Pegatrons, these kind of companies which are there. So these are the companies which have come due to this. Almost 11,000 crores of committed investment has come. And vice versa in the other schemes also, where you see large investments being coming in. And you also have these 9 schemes which are there now, which is so schemes which have been recently announced, which are there, and schemes are also there in pipeline. So you will see a lot of action happening. The intention of PLI, as I told you, is to incentivize higher production, I would say. And you have the white goods and AC, LED policy, you have pharma drugs, you have food products, high efficiency solar PV modules, advanced chemistry cell batteries. And what we hear out is that, see, this template of PLI is going to remain for the central schemes now. You will have PLI coming for chemicals, you will have PLI coming for toys, for IoT devices, for drones. So large coverage of this will happen. So the basic principle here would be that you produce more. 1920 would be the base year. They may change the base year for as schemes progress, but you produce more, you get those incentives, how this will work. And of these 10 sectors which are there, which have already been announced and which have come, 3 sectors which from a MSME perspective, I feel are important are food products. This scheme is already out. So food products becomes very, very relevant here. You have pharma. Pharma also, they have kept a space for this MSME sector, and also textile. So textile, the scheme is still in pipeline. We are expecting that to come in some time, but this is something we need to keep a watch on, I would say. And just to take a minute here, that how the application works. So you need to apply. Government has outsourced this to a project management agency, which in some cases is IFCI, some cases is others. So the appraisal agency will appraise your project, and on the basis of that, you will get an approval, and on the year-to-year basis for the next 6 to 7 years, you keep claiming those subsidies which are there. And last part, I guess, which is important, is the income tax deductions also, which are available for manufacturing. So in October 2019, if you see for manufacturing companies, they reduced the rate from a peak rate of 35, then to 22, and now to 15. So along with surcharges, it comes to 17.16%. But you need to start your production before 31st March 23, and the registration needs to happen after October 1, 2019. So it has to be a new company, So if you are claiming these incentives of 15% income tax rate, you cannot claim any other deductions which are there. So a certain kind of evaluation would come out here. And obviously, who better, as I say always, than chartered accountants to do this? And let me tell you, friends, why this has really come, this mover and concessional income tax rate. And again, at the cost of repetition, I would say, this is over and above everything. So आप income tax का rate ले रहे हो, इसका मतलब ये नहीं आप mover नहीं ले सकते. You cannot claim PLI or you cannot claim state incentive. You can claim all of them together. Why this was being brought in? If you see this pandemic zone, so you had this, I would say, China plus one strategy coming in. Okay, how do you incentivize companies who are moving out of China and how they can be incentivized? There, if you see the competition, what India was having for manufacturing were not with developed countries. Those were actually with the South Asian countries. So people were looking at Indonesia, Vietnam, Malaysia, Philippines as an alternative destination. Many of those electronic companies have actually moved to Vietnam rather than India because the income tax rate there were quite less. So this concessional tax rate was actually to beat those South Asian countries. And this mover also came at the same time to actually beat that. So various measures have been taken by the state government, obviously to make India as a attractive manufacturing destination, I would say. Other income tax benefits which are not new, I would say, but sometimes we forgot those and need to be looked in a different light. So just to give a very, very simple example, there is a payroll deduction which you see, which I will say most of the companies, manufacturing companies do forget. It talks about, which is a section 80 JJAA. So many of the companies, if you see, and the scope of this section has been widened a lot in the last 3-4 years. So it talks about a 30% additional deduction of salary over a 3-year period. So if you have increased your employment on payroll, now the additional salary what you are going to pay them, you normally get a 100% deduction. So if you have paid salary of 10 lakhs, you will get a deduction of 10 lakhs against your expenditure and you will save tax of 30%. What does this tax talk about this? If you have spent 10 lakhs on that incremental labor, you will get 30% additional deduction for year 1, 30% for year 2, and 30% for year 3. So this is applicable for new employees. So you spend 10 lakhs and you will get overall a 190% deduction on your expenditure. And I'll tell you, friends, many of these companies have actually not claimed this. So sometimes what happens is you need to look at questions in a new light, I would say, and rather look at the drawing board again. कि कोई भी customer, कोई भी client आपके पास आता है कि whether they are looking of any benefits or probably to start any new activity. Obviously not trading. Trading will not be covered in most of it. But if they are looking for any kind of a manufacturing, may not be eligible finally, but it will be good to explore some of this. कि कोई आपके पास एक simple ये आता है कि भाई मुझे तो I have a plant in Mulund, in the Mulund industrial area. I need to buy, import 2-3 crores of machinery. So you can tell them कि बस possible है कि आप उसका mover का benefit ले लो. कि आपको ड्यूटी अभी तो बच जाएगी and you will pay it after a period of 10 or 15 years. So I guess the intention here, as I told you, is to keep your eyes open to these kind of developments which do happen, which become very, very relevant. Role as a professional, and I guess no one can undermine the capacity or the capabilities of a chartered accountants, the grip of figures, what we have, what we can really look into this. So ensure, liaise with the government officer, apply, advise, and the grip of figures what we have, I guess we are very, very well poised to look into this. And the networking opportunities, which I told you that if a chartered accountant is based out of Kolhapur or Sangli, and he can't travel to Bombay very regularly, then why people in larger cities like Bombay, Pune cannot do this? So that is something to be looked. Why you can not form a national network? Like if your company wants to invest, if your client wants to invest in a Madhya Pradesh, talk to some CA in Madhya Pradesh whether you can look at those incentives. So I will not say it's simple, but I will not say it's extremely difficult also. So if you have the intention to grow, I guess there are a lot of opportunities out here. And what we have seen actually in the practicing chartered accountants, at least in this space, so what we are seeing is if you have 2 to 3 partners in an organization, I guess you can say one of the partners to get totally dedicated on this one and really be applying for these subsidies. And then the other work, because you are put the foot in the door with the subsidies because it's a new company, then the other work obviously of income tax or GST or other works or audits will obviously follow, funding, project finance. So if you are a partnership firm, I will say dedicate one of your partners to actually get exclusively into this. So a lot of professional opportunities, and I will say there is no dearth to this one, at least in the next 5-10 years, where India is planning to be a economic superpower, I would say. So with this, I will probably end the presentation. Obviously, the floor is open to questions now. And as I told you, the intention here was to largely cover what are the subsidies. So you have a bird's eye view on this. And obviously, when you are talking to clients, you go back to your drawing board and see whether there is any possibility out here which needs to be looked at. So with this, I will hand it over back to Pankaj. And we are open to questions now.
Yes, sir. Thank you for the informative session, sir. There are a few questions posted. One is posted by Akshay Humia. What if the MSME has incurred a cost for setting up an industry and after 2-3 years it is discontinued due to some reason? Then till what time it can get subsidy and to what extent?
Yeah. So suppose Phil, all this scheme do have an operative period also. So because this subsidy has been given to you to maintain certain employment conditions and those, so till the period of the subsidy, you will be expected to stay there. So it's not that you can just take a subsidy after 2-3 years, though factors which are sometimes out of your control, which you cannot help actually, but you will be expected to stay there. And if you breach that operative period clause, you will be expected to pay back that subsidy. So if you're talking of a 7 or a 10-year period of subsidy, they also have a lock-in kind of a period of 2 or 3 years extra. So if you're claiming those subsidies, you will be expected to stay there for a period of 7 to 10 years as the case may be. And that will largely depend on your zone. But yes, if you are closing before that, you will be expected to pay back that.
Okay, sir. Any more questions from the members, please?
Yeah, I have a few questions, Pankaj. Can I
Yes, sir.
ask?
Yes, sir.
Bhavesh bhai, one of your presentation was very clear, very crisp, and covering everything. Congratulations for giving such a nice presentation.
Thank you, Inej bhai.
Yeah. Sir, I have 2-3 questions.
Please.
One is you have not mentioned about union territories like, most of the people have nowadays factories in Silvassa, Daman. Whether the Gujarat subsidy is covered or Maharashtra is covered, or there are some different subsidy schemes available for putting up factories there.
Yeah, see what happened is no, Gujarat or Maharashtra do not cover those subsidies. Unfortunately, these policies didn't get renewed after the GST came in. And there, if you see, if you look at the union territories of India, so there I would say this Gujarat ones, the Daman, Diu, Silvassa, have no subsidy effective at this point of time. But if you look at a Pondicherry or a Lakshadweep or a Andaman Nicobar, those subsidies are there. But somewhere, I will say these 3 union territories have clearly missed it. And the GST notifications have not been renewed. So the Gujarat policy will not apply to that, nor even the Maharashtra.
Okay. One more, I'm very keen to know more about the mover scheme, because in this, what is the benefit to government actually? I'm very surprised. Because you are losing everything actually, practically. So can you little give more light on this actually scheme? I'm very keen and very surprised actually.
So Inej bhai, that was even, to be honest with you, even we were surprised when it came in October 19. and we talk to very senior government officials कि सर आपका intention क्या है ये देने का, तो आपको तो कुछ नहीं मिल रहा है आज के दिन में.
Correct.
So see, all the state incentives or PLIs or these mover scheme, the intention is the long-term vision what they have. कि चलो आज का तो ये हो गया, but manufacturing हो जाएगा, employment generate होगा, यही employees. Take an example, like if you set up a factory and you employ 500 people. So these 500 people setting up in Maharashtra, फिर ये लोग सब यहाँ पे खरीदी करेंगे, उसपे GST स्टेट को आएगा, और उसका बाद में जो प्रॉपर्टी टैक्स ये लोग घर खरीदेंगे तो वो स्टैम्प ड्यूटी स्टेट को आएगी, गाड़ी खरीदेंगे तो वो GST स्टेट को आएगा. See, this is somewhere a long-term vision which is there. If you talk of the immediate benefit, let me be honest, on mover तो government has no immediate benefit. But क्या था वो जो stage था October 2019 or somewhere, if you stay with this income tax rate cut, it was very important कि कुछ तो ऐसी स्कीम आए जिसके कारण capital import in India becomes tax free. That was the large intention. कि capital आप ज्यादा से ज्यादा manufacture कीजिए in India. So to answer your question, there was no economic calculation under this, but the intention was more long-term in vision, I would say.
And this is given by central government, correct? This
is by central government, and this does not depend on any location. Right. As I told you, even if your client in Mundun industrial area wants to claim it, they can take it.
Okay, including Union territories, anywhere it is.
Anywhere. This is a custom administered scheme. So the custom officer will give you a certificate. Just one thing you'll have to keep in mind is, ये import होने के पहले आपके हाथ में वो certificate होना चाहिए.
Okay. Something so like a essentiality certificate used to be there earlier.
Exactly. So जब वो certificate, जब वो आपका machinery would come on the Bombay port, suppose JNPT, before that you should have that certificate in hand to claim this exemption.
Okay. And we used to hear a huge claim by Maharashtra government, 6 lakh crore commitment signed, and we are at 13 number. It is very pathetic to know how they are giving such claims in newspaper actually.
Yeah. So there is there are certain parameters on how this all is rated, and sometimes जो बोलते हैं ना statistics and all that, you need to go beyond that. And even if you, and I am not favoring anyone or against anyone, but just giving you a perspective around things. So even if you look at the ease of doing business ranking of countries, where India has jumped from 132nd to 63rd or 62nd or whatever. अब ये जो ease of doing business rankings है, जो World Bank करने आती है, does it look at the whole of India? No, they look at only Bombay and Delhi.
Correct.
कि Bombay and Delhi में क्या हो रहा है? तो is that a correct indicator of the country? What is happening in the West Bengal or what is happening in the Cochin? So that's not a correct indicator. Now they are going to increase the sample and you'll actually come to know. Same way during states also, क्या हो जाता है कि आपके पास सब जो 50 factor है, which determine के whether you are good or bad, right? Out of this, 10 factors are something which will be given a ranking system. Now on that 10 factors where the ranking system is there, उसपे आंध्र प्रदेश या तेलंगाना या उत्तर प्रदेश बहुत अच्छे हैं, तो they will get a higher rating. But on the other 40 factors which are not being rated, probably Maharashtra may be there. I'm not, as I told you, supporting anything, but this is where statistics do. It's not an entirely wrong picture, to be honest with you, but statistics do give a blurred picture also at some point of time. Is always I feel.
I would like to share my experience when the clients come to us to discuss to set up a plant. Because we are based out of Bombay, we try to promote Maharashtra, but finally they end up at either UP or Andhra or Chennai or Rajasthan. Nobody thinks about Maharashtra to set up because of far lower price of land and better incentives. I have no idea why. We may throw more light. Why Maharashtra is lacking out? Where are we missing actually?
Yeah. So two factors I will say out here, and whenever you are also talking to clients. So obviously the publicity of other states has been quite high. If you look at the aggression of our Uttar Pradesh or Andhra Pradesh or even Tamil Nadu has actually gone into this. So various international seminars pe jana ke boss, we are Uttar Pradesh, we are the state to come, we are Tamil Nadu, such a progressive policies, all that stuff. So there we are clearly lacking. in the general perception and approach and all that stuff. Then also how the media projects this whole thing कि इधर ये factory में ये problem आ गया. Obviously you are an industrial developed state, तो वैसे रोज के कुछ ना कुछ problems आते रहेंगे. But also the media projection plays a large role. But let me tell you, I've been practicing on 20 state incentives. So I practice on this incentive space all over India. Let me tell you, on delivery of those incentives, like देखिए ऐसा तो नहीं हो सकता कि आप आज इंसेंटिव के लिए अप्लाई कर लो और 6 महीने में वो आ जाएगा. It will take its time. On delivery of those incentives, I will still say Maharashtra will rate much higher on other states. We are clearly missing the bus on media, the portrayal, and knowledge dissemination, I would say. So as professionals to start with, you can actually see कि आपके हाथ में क्या आ रहा है. What if you set up in Tamil Nadu, you do a calculation कि 10 करोड़ का प्लांट अगर मैं भिवंडी में लगाता हूँ vis-a-vis तमिलनाडु में लगाता हूँ, you actually see what is the subsidy actually coming in by the sale pattern and everything. And when you do that evaluation, in most of the cases, you will feel Maharashtra is much higher.
Sir, I have a small doubt. This is regarding the mover scheme and the EPCG scheme. See, now there are many companies which are availing this benefit under the EPCG scheme. So now this movers have come, which has no obligation for exports. So you mean to say that such companies can now look into this option also?
Yeah. So EPCG,
yeah.
EPCG is a different scheme and mover is a different scheme. EPCG is a complete exemption and you need to have that export commitment of 6 times. So आज क्या हो रहा था वहां पर कि companies which were there, which were not having exports in their turnover, so उनको तो कुछ benefit मिल ही नहीं रहा था and they were paying their custom duty. So mover scheme has been brought in to actually as an alternative to EPCG, even if you're not having export turnover, you can still look at the mover scheme, claim those benefits, and it's not a complete exemption, it's a deferral sort of, where you need to look at after 10 to 15 years when you're paying it. So it is 2 separate schemes, and this is more for the not to meet the export commitment.
Okay, thank you. That was a good explanation. And one more thing which many of my clients have asked me is about this NSIC certificate. You know, they have come up with this telling that what is the benefit of getting registered under NSIC as an MSME unit? I mean, can you just give me some idea about it?
NSIC?
Yeah.
Honestly, ma'am, I'm not updated on this one. I will come back and I'll post my reply to Pankaj and probably he can circulate.
Yeah, because there are some, when they are going for tenders, I believe there is some waiver of the security deposit.
Tender fees and security deposit. Yeah. I'll exactly find out this. And so it may be industry specific. So largely, whatever you are a MSME registered, so the tender fees or the EMD fees which are there are waived off in the case of MSME. So that was the part of the presentation, but I'll get back on this specific on this NSIC one.
Yeah. And one more thing, is there any scheme where you get reimbursement of the certification charges under MSME? Is it still there?
No, you don't get the certification charges of MSMEs, but if you go for the certification charges of ISOs or quality certification kind of certificate, they do get reimbursed.
But when I spoke to this MSME in Mumbai, they are telling the scheme has been stopped for more than 3 years. Are you not aware of this? So
no. So this is covered in the package scheme incentives of Maharashtra. So what is happening here? So any manufacturing in Maharashtra, which you get registered, and that is not zone specific. So this is a clause 4.9, which they call of PSI 2019 scheme, which is there, the scheme which we just discussed. So वहाँ पे ऐसे जो खर्चे हैं like water audit, quality certifications, you can get a reimbursement under that.
Okay, thank you.
And this will be administered in Maharashtra in DIC Thane, which is near the Mulund Chaknaka, and obviously larger ones will go in Bombay near Chunabati second, and obviously the new administrative building opposite Mantralaya. So this
Okay,
will be the reason.
yeah, I'll have to inquire, because when I just called up and asked them, they said, "Madam, the scheme is already stopped and other things." So I was not very sure, because everywhere the scheme was there, wherever you get the certification from ISO. So I
Correct.
just wanted this clarification. Yeah, thank you, sir. It was a very good presentation and an eye opener in many ways for us.
Yeah, thank you. There's also one question in the chat. Okay, all these schemes are fine on paper. In reality, how easy is to obtain? Honestly, it's not easy. It's not easy also. I'll not say like it's extremely difficult also. It's a follow-up kind of a practice. Things are changing, I will say, in the last 2-3 years. All is online now, most of the states, at least central. I will say still the central benefits would be relatively easier as compared to state. So if you're talking of mover, I'll not say it's difficult. It is simpler. But yes, state may, they will have to up the ante, and it will take 1 or 2 years more to probably get fully streamlined on this whole online mechanism. Or kya ho raha hai abhi, budgets is becoming a big constraint in the last 1 year. If you see, COVID ke karan, the treasuries have been badly hit, and the taxes are not coming. So the disbursements have taken a hit in the last 7-8 months for sure. The thing what I always tell industries on this is, see, you are not setting up an industry to claim an incentive. You are setting up an industry because you have a market. Like I always give an example, like you are not getting a car, you are not purchasing a car, you buy a car because you need a car. You don't buy a car to claim depreciation. अगर आप depreciation के लिए कार लेने लगे तो वो कार आपके घर पे सफेद हाथी बन के खड़ा हो जाएगा, right? You need a car, so you buy a car. So what I'm trying to put across here is you set up an industry. Incentive is the cherry on the cake. You will not set up an industry to claim incentive. So that is something we'll have to keep in mind. So take this as an additional bonus which comes to an industry, I would say.
Bhavesh, one more question. You mentioned about 5% interest subsidy, which is mentioned for Gujarat or any other state.
No, that was for Maharashtra. Gujarat does not have an interest subsidy. Yeah.
Okay, but there is something central government subsidy, say in textile sector, called tough scheme.
Yes. Yeah.
So is it either or will be eligible if I set up say plant in Maharashtra for a textile? Will I get tough also and the Maharashtra government?
You will get both. You will
so
get
I will
both.
get both. Okay.
You can get the central government scheme. You can get the state government scheme. आप income tax का भी reduction ले सकते हो और आप mover में भी register हो सकते हो.
Okay. Okay. And there is no such scheme for Gujarat for tough.
No, interest subsidy
for interest subsidy.
No, not in Gujarat.
So this is a huge benefit in Maharashtra if you set up.
Yeah. So as I told you, Inish bhai, once you go into details, you will come to know Maharashtra policy is really very good in some of those sectors. But I will say the general perception needs to change a lot clearly.
Correct. Because generally allotment of land is a larger issue for every.
So
every client which comes to Maharashtra actually, they are very dissatisfied with the way they give you land in Bid, they will give you land in some remote area, Osmanabad. Whereas foreigners don't want to set up project where there is no connectivity actually.
I agree. That becomes a problem because all want to stay in Bombay, Pune where you don't have
correct
land out.
True. Thank you very much.
Thank you.
Just on your experience, you have been dealing with several investors. Are they really keen to set up in India? Because I find India at number 4 as compared to the global list for Asian country. And first is a clear winner, which is Vietnam actually. So, how will India rise up to small country like Vietnam actually?
So kya hua, if you see Vietnam na, so it is also the sector focus which came in. Vietnam ne single-minded sector focus rakha कि let's look at electronic products. Now what does India need to do out here is, even within the states they can have a sector focus. कि अगर आपको food processing लगाना है, go to Punjab. अगर आपको textile लगाना है, go to Gujarat. If you want to get into auto, get into Maharashtra. So create those kind of centers of excellence out here. And have that kind of a coordination between state and center for an easy flow के आज क्या हो रहा है कि आज आप सिंगापुर में जाओ आपका 2 घंटे में कंपनी फॉर्म हो जाता है You have a cup of tea in a 5-star hotel, और तब तक तो आपका company form होके आपके हाथ में certificate of incorporation रहता है. When with these seamless things happen, so though from 132nd to 63rd you are there, there is still a lot of progress which needs to be made out here, and surely the path is right. The direction has been laid. See, I guess now the trick lies in implementation. Your project link, production link incentive scheme, jo aaya hai, the trick lies in the implementation. So I will say the next 2-3 years are really going to be crucial. So the building blocks have been made now. Now, where do we land up now finally in all in this is really to be seen.
Right. Thank you.
Sir, can you throw some lights on subsidy on service sectors?
Service sector, see, just now if you look at the Jammu and Kashmir scheme, they have covered a lot of service sector subsidies. But yes, largely if you see from all state perspective, tourism is a service which will be given. IT, ITES or back offices is a subsidy which will be given. But I will say largely service sector subsidies are at this point of time limited. The service sector space subsidy in India is not yet matured as compared to other countries where waste management, R&D are given those kind of subsidy. India has still not reached there or started there, I would say.
Okay. And sir, where can we get in-depth details of subsidy like state subsidies or central subsidies?
See, central you will get it from the Invest India website. Invest India ka jo bhi website hai, if you scan most of them, you will get all the central subsidies. State ka you get it from the industries portal. But state ka, let me tell you, आपको थोड़ा ढूंढना पड़ेगा. It's not a central platform, if I want to say, कि जहाँ पे सब एक जगह मिल जाएगा. Slightly challenging, but you do get it on the industry's website of different states. And Central Invest India is I will get a good maintained single source.
Okay, thank you, sir.
Any more questions from the members, please?
Sir, any incentive available for chartered accountant firms?
No.
You set up something in some other state, an office or something, nothing.
So chartered accountant को सिर्फ client को guide करके you will have to get the fees, that's the incentive. But nothing as such.
Very good question.
Okay, thank you. Because we are finding, even though we say we have come from below 100 to around 63rd or 62nd, my personal experience while we form companies for foreign clients, it is pathetic. It even today takes 6 weeks time, and everything is filed with MCA. Still they say this is not available. You refile, and finally you get the certificate after 6 weeks to 8 weeks. And this is faced by several of our friends who are forming new companies for foreign entities.
Correct, Ginesh bhai. And as I told you, the trick lies in implementation. So up to aise ho gaya, we have reached a stage. And again, as I told, I'm not aligned to any political ideologies out here. But I guess we have reached a stage here ke everything has been set. Ab baatein ho gayi. Now the trick lies in implementation. If we make this implementation trick in the next 2-3 years, I guess we will not have that progress which is expected on us.
Correct. Thank you very much.
Yes, sir. Any more questions, please? I would like to thank Bhavesh sir for this wonderful informative session. May I request Dinesh sir to please offer a vote of thanks, please, sir?
Yeah, thank you, Bhavesh bhai. I think we have in recent times we have not really seen such a nice, very clear presentation. I think what you have covered could have taken one full day, but I think in 1.5 hours you have summarized it so well. Actually,
thank you.
There were no doubts on any of the slides which were presented. Actually, so thank you, Preeti Ben, for recommending such a nice speaker. And we really had a very nice Sunday spent very well, actually. Thank you, Bhavesh. Yeah.
Thank you for the August gathering hearing, and Thank you, Preeti Ben, for recommending me for this.
Today is Hinesh Bhai's wedding anniversary also.
Oh.
So
Yeah,
wish you a
anyway.
happy anniversary, Hinesh Bhai.
Yeah, thank you very much. Thank you, everyone. Thank you, everyone.
Happy anniversary, sir.
Yeah, thank you. Thank you. Yeah, thank you, Bhavesh. It was very wonderful presentation. And please share it in our Chembur Study Circle group. Those who have not attended will really miss it actually.
Yeah, so I've already circulated the presentation to Pankaj yesterday. Right. And he can circulate to the relevant team members, and we'll look forward. I'll look forward for more some interactions of this kind, because obviously the knowledge sharing which goes into this, and just going on the basic theme, don't be a master at this, but at least keep the eyes and ears open to these kind of opportunities. So at least you have some speaking point to clients, because you will have to somewhere move out the compliance zone at some point of time.
Correct, correct. Agreed. Especially this mover is something very eye-opener. I mean, I really never knew till you have informed today morning.
And Hinesh bhai, this is the October 2019 scheme. So almost 2 saal hone aaye and no one is knowing about. As I told you, 60-70% chartered accountant professionals are not aware.
Yeah. Agreed. I agree with. Perfect. EPCG and all, everybody knew, but this mover scheme, nobody knew actually.
See, that is where somewhere as a knowledge dissemination, and not because I am a part of a big four, but those knowledge bases and which get circulated very quickly in a large organization needs to come to the medium level and a small practitioner also very, very quickly. That's the intention, I guess, how the knowledge flow has to happen. Not boasting of what happens in a large organization, but this is somewhere which needs to be replicated in other firms also.
Correct.
That is nice of you, Bhavesh bhai. It's a really great knowledge dissemination, and everyone is aware about it. So
absolutely.
Excellent.
Thank you, everyone, and thank you for the time given. Thank you.
Thank you.
Thank you, sir. Thank you very much.
Thank you.
Thank you, everyone, for joining today. Thank you, Preeti Savla, ma'am, for your immense help. Thank you, Bhavesh sir, for the wonderful session. I'm sure many people will benefit and they will start practicing in this new venture also. So, thanks a lot, sir.
Thank you.
Thank you very much.
Thank you, sir. Thank you very much.
Thank you, everyone, for joining.